my information probably not too complete, but it's not too far away from the truth. At least 10 billion collaterals are in a way of stables, basically stable coins in the smart contract, locked in the smart contract.
Tokenization of financial assets on public, permissionless, open blockchain networks is not just the future, it's already happening. It's not going to be very far away when we find ourselves in a new financial ecosystem where hundreds of trillions of dollars of financial assets are on chain. We're going to be talking with a founder, Henry Zhang, who saw this opportunity very early. I'm Sri Misra, your host for Alpha Unashed. Hello, everyone. Welcome to Alpha Unhashed. Today we have Henry Zhang, founder of DigiFT. Henry, welcome. Tell us something more about DigiFT.
Hi, Sri. Thank you for inviting me. Happy New Year. Um,
Happy New Year to you, of course.
yeah, hope we have a very good 2025. DGFT. DGFT is a marketplace for real world asset tokens and based on the DeFi technology. We are also licensed. We are the first one and still the so far the only one got the license in as a DeFi marketplace by the authority, monetary authority of Singapore. So basically, DGFT we call ourselves a Generation Three open exchange. Happy to elaborate when we talk.
Yes, in fact, let's dive right into it. What, according to you, is a Generation 3 open exchange?
Yeah. When I say open exchange, is based on the public blockchain. When we see generation three, uh, comparing to one and two, uh, generation one, I would call it is like a proprietary platform on closed network. This a closed network can be proprietary network or private chain. The typical case is like Nasdaq, for example. Um, the feature of generation one is those assets you purchase from this proprietary marketplace, you can only sell the same assets on this only proprietary network. That's generation one. Generation two, which are pretty mainstream in the blockchain space, I call it a proprietary platform, open network.
Mhm.
Proprietary is still like a centralized marketplace. But the product, the assets, you can purchase from one platform and sell on another platform. For example, just like BTC, you can purchase BTC from Coinbase, then you can sell BTC on Binance. Or you link to your wallet to a DeFi protocol to do some transactions. But you need to do one thing inevitably is you need to withdraw the token from the proprietary platform to your wallet. Then you redeposit the token on another platform or link your wallet to the DeFi protocols. That's generation two. Generation three, I would call it like open. It's an open marketplace, open network. This open marketplace, somebody call it a decentralized exchange like DEX, or I call it on-chain marketplace. On open network is more like a public blockchain. Then the features of this generation three is the platform itself does not own the asset. So the assets before the trading, it is in the people's wallet, investors' wallet, like your money, USDC, USDT. And after the trading, uh, the USDC has been paid out in turn the asset token credit into your wallet. So everything is in your out of your wallet and in your wallet. People have so-called self custodian, and then you can link your wallet to any DEs, or you deposit the token in your wallet to a centralized or proprietary platform. So the connectivity, the composability, and also the capital efficiency will be much higher. That's why I call it the generation three.
Right. Now, fascinating to hear that analogy, and especially even from my perspective, being immersed in the space and designing Arna protocol, which is exactly based on this sort of an open protocol and design, where it's not only on an open network, but it's also the protocol is a permissionless, trustless design completely on a defined native architecture. I clearly see tokenization as the future of financial instruments. And at DigiFT, you've been a pioneer in this space, digitizing TradFi securities on an open network. So, what were some of the sort of very critical challenges you faced when you embarked on this?
Yeah, Sri, as you mentioned, I also of the same view. Tokenization or the assets in the token way is the future. This is like step one, two, three. Right? The
Mm,
step one, the ownership is represented in the mostly in the papers. So the money is a paper, stock is a piece of paper. Um, Very difficult and to exchange. Then coming to current phase is most of the ownership are represented in a way of electronic records. Then the records is given by a centralized counterparty. Deposits coming from the bank tell you how much you have. Stocks by the broker dealer. Then coming to the phase three, this is the future phase. The things will be represented, the assets, the ownership is represented in the form of tokens. Then the token is recorded on the blockchain. So it's accessibility, transparency. That said, tokenization token is the digital representative of ownership. Then what assets do you represent? Can be the native digital assets like a BTC, ETH.
mm.
People more and more accept to that. Then the people say "Hey, there are many other assets of value, which are true, and also the quantity actually is very big. That's why called the non-crypto assets or called the real assets. To using tokenization to represent the ownership is a
Mm.
trend. The benefits are very clear. But that said, those kind of assets they do have a physical or kind of a representative in another world called the physical world or current world. Then
Yeah.
you have to link the underlying assets and have a digital records on chain. There's some linkage. It is a challenge, but this is also there's some way to address that. You put the underlying assets in some custodian trust, but you have a digital twin to represent the ownership. Then you just exchange the hands of the tokens to enjoy the benefits of the token forms.
Right. So, when you began, what was the first asset that you tokenized?
We have tokenized a couple asset classes, but look at DGFT and look at the whole industry. The most popular assets has been tokenized. People may say it's a U.S. Treasury and money market funds.
Mm.
They are, but they have another name called them is like a standard assets because assets are very standard. So it's most easy for people to understand what it is. I would say at this moment, we're at the stage of a tokenize those kind of standard assets.
Standard assets.
Down the
Okay.
road, the of course the scope will be much bigger, but start with a very standard, the most standard assets be tokenized.
Right. Okay. So, taking standard assets, tokenizing them on a public open network. I'm guessing you're on Ethereum.
We start with Ethereum, and we also are multiple
All right.
chains, because
Okay.
when we say the network, there's not only one.
Yeah. And that straight away brings us to the issue of liquidity fragmentation that we see in DeFi, in multiple, not just on across chains, but across different protocols. And when you take a tokenized asset, a tokenized standard asset, how do you deal with liquidity fragmentation in terms of distribution and user access?
Yeah, so you mentioned this fragmentation. I would say fragmentation is a big pain in the current financial industry.
Mm-hmm.
Um, Probably we are quite used to the current situation. But if you take a second look, actually you find it's a pretty fragmented. For example, where do we buy stock? We go to different type of stock exchanges: Nasdaq,
Mm-hmm.
NYSE, Singapore, Hong Kong, London, Tokyo, multiple. Then, if we go for the fixed income, just like treasury bills, it's a very
Mm.
different market. Go to derivative, another different market. Commodity, another different market. And then each country has multiple couple markets. Then you cross the jurisdiction, that will be much more complicated. That's why, from the investor's perspective, if you want to invest, basically is
Mm-hmm.
allocate your assets.
Mm-hmm.
The more assets you are looking at, actually you need to access to multiple markets to enable you to deploy your assets. Uh, that's the fundamental issues or reason cause the fragmentation of the liquidity.
Mm-hmm.
Then the people will say, what's the ideal stage? Is basically you have the money in your own one account, but you can use one account to access to multiple assets in different jurisdictions, but you don't need to put 20 here, 20 there, 20 over there. So that's the fundamental reason. Then tokenization blockchain just offered an unprecedented opportunity to deploy the assets, deploy the liquidities much more efficiently, much more efficient. For example, now if the money on one chain, you have, for example, like stables, right? Stables money is a medium of exchange, so stables is a good medium, no matter who issue it, but it's a stables. Then stables on chain, then you can access to multiple assets on the same chain, no matter it is a native cryptos, BTC, or different type of real world assets. Then some smart guys are creating, giving the solutions like a cross-chain connectivity, so different type of technical solutions. So the money sitting on here, you can easily move to there safely and efficiently. Still not very ideal, but the world is moving that. So that said, is I would say this a blockchain-based token, no matter token money or token assets, uh, given the unprecedented opportunity to can move the money and assets much more easier than current world.
Mm-hmm.
That's the key reason. I would say this is will be one of the key incentives why we need to move those assets, no matter native or RWA underlying, to move to the so-called token world, using token
Mm.
as the ownership. Then we can build off a lot of other things, including liquidities down the road. That said, it is still at the initial stage. That's why we don't see huge liquidity yet. But this is just like a highway, you need to build it. Then you build the highway as a network. Then the logistic will be very, very different.
Mm-hmm. No, that's actually a very sort of fundamental analogy when you look at TradFi markets and liquidity fragmentation described in that way, and how tokenization can completely make it seamless in terms of access and liquidity, and at the same time also probably bring in other dimensions like fractional ownership as well, which will further enhance liquidity. However, if you take a more in the current form, take a practical application. Say, for example, take a money market fund which you've tokenized. Now you've tokenized it on one chain, let's say Ethereum, but you've got users spread over, say, multiple three, four chains. And how do you go about it practically? Are you tokenizing it across different chains, or is there a cross-chain bridge or protocol that you're using at DigiFT which enables a user from different chains with whatever your input sort of token is, let's say stables, to come in and deploy into that structured product.
Yeah, this is very important, right? Look at, we do have a multiple chains in the world, actually quite a lot. Um, each chain, once they have a chain, they have a community, right? Ecosystem.
Mm.
which means they do have money. They do have monies on their chain,
Yeah.
small or big. Um, so this money happy with the performance of the chain, the money is want to sitting there. But the money need to be deployed in some assets to earn the return or have some other very interesting use cases. That's why they want the assets, the same type of assets can be available, natively available on the chain. So the money on the chain can easily just swap into the assets they want. Um, that's one thing. That's why money want to have assets on their own chain. On the other side is DGFT is very focused on the one side we mentioned the asset type. But when we trade, there are always one pair of trading, one pair of assets to trade, like swap. So other side of
Mm.
the leg of the trading is usually the money. You look at the money. Another trend is look at the money, no matter DT, DC, and others.
Mm.
They are also on multiple chains.
Yeah.
They also are multiple chains. The same USDT, the same USDC, they are multiple chains. Why? They call themselves native money stable token on the specific chain because there's a need. Otherwise, people need to bridge the staples from this chain to another chain, isn't it? So that's why some money also call themselves open money. I think this kind of concept is consistent with what we try to say we are an open marketplace. Then
Hmm.
look at the asset side is they can either call them like open asset or can say the assets on multiple chain. Just like when you have a stock, you can automatically list on NASDAQ, London, Tokyo, Hong Kong, Singapore, right? In the current world, you need to basically need to do five separate listings.
Mm.
In the token world, probably just in a plug and play. You can be on multiple chains, but all the money can be consolidated into one asset type, like a one money market fund. This
Right.
looks to
So,
me
so
is if
yes
it's
and no, Henry. Right? Because, for example, suppose let's say a tokenized product is on an EVM, is an EVM tokenized product. So it's an
yeah.
ERC20. But once you look at going beyond an EVM chain, then how you would still need to create another tokenized product of the same underlying asset on that chain, or how would you otherwise handle it?
Say EVM plus Solana, right? Just give
Yep.
an example. Then the assets can choose, okay, I make my asset token available on both EVM,
Mm,
Ethereum, and or some layer two, and on Solana. Just say 50-50.
mm,
Then the money on Solana, they don't need to bridge the money from Solana to EVM because become another ERC20 thing to buy this asset. They can just native token asset token on Solana versus together with the native stables on Solana. So that's the make things easier. And how, for example, like a Solana compete with another chain is depends how this chain to develop your ecosystem. Once the assets on your chain, you can have other protocols like staking, like collateral, lending. You create the make the ecosystem rich, then the money will be happily sitting on your chain. Then different chain will compete each other. But rather than once this one chain is much better versus another one, so then the people can just move the money will moving from one side to one pool to another pool. But this is
mm-hmm.
much more easier compared with when we move the physical money from the current one jurisdiction to another one. Yeah.
Okay. And but that will involve significant regulatory clarity.
You are right. If we touch some assets, we call the regulated financial instruments.
Hmm.
No matter we call them securities, fixed income, and commodities. Um, Many these kind of so-called financial instruments are regulated financial products.
Yeah.
It's a matter of fact. Now, anything related to those kind of regulated products, we call the regulated activities. Like how do you originate, you sell, you trade. many steps are become regulated activities. Then, if you touch those kind of regulated activities, no matter
Mm.
which technology do you use, you're subject to some regulation. That's the logic why the regulations kicks in because you are dealing with regulated activities. That's the thing. So then the people say, hey, since probably looks more complicated in dealing with non-regulated products, which it is the situation. That's why we
Hmm.
need to so-called deal with or work with regulators. And one more complicated aspect is regulators are jurisdiction specific.
Yes. Yeah.
There's not one regulator, so make things complicated.
No, absolutely. Also, on top of sort of the underlying assets, several jurisdictions have strong capital controls in terms of cross-border flow. Kind of that also, in many ways, impacts the whole thesis of tokenizing on-chain, seamless liquidity. So, yeah, I guess from multiple dimensions for tokenization of tokenization as a technology and as a as the sort of to reach its real potential, we will need clarity on multiple dimensions, both on the underlying assets if they are regulated securities or and what have you, and also on capital controls. So do you think going back to your you're a seasoned career banker who's now on the other side of the table, and we'll get into that, but do you think in your vast experience we are moving towards more regulatory clarity or across when you look at a global landscape, or do you think we're actually getting into a zone where there is more regulatory clampdown?
That's a challenging question, right? But I would say you look at the regulations. There are some facts are there. Let's recognize that. First of all, I mean, regulations itself are evolving.
Hmm.
They're evolving. So
Yeah.
even the security law today was not the security law. I mean, when it was established. So it is evolving. Um, but, but why the people will say you maybe evolve too slow, right? Um, there's another fact. Matter of fact is regulations are always behind innovations. They are not supposed to be ahead of innovations. That's the basic logic. Um, bring the balance back is, of course, we want the regulators to, you know, not just to sit lay back too much behind innovations. They should be also. We also encourage them to be more actively engaged with innovations,
Yeah.
especially when big innovations, which usually driven by the technology, coming to the market, which means the things are not like change gradually, but change maybe more quickly, right? Just like what we're facing from the Web 2 to the so-called Web 3. That's a big innovation, just like we're dealing with internet 30 years ago. That's another generation. That's why people feel very, very excited, but also people also have the eagerness to see the regulation to come with the fast growth of technology. There's a period where we say we're in a period of I will not call it conflicting, but I will say the time of adjustment. But moving forward, since we're sitting in the early of 2025, personally, I'm generally positive. Just look at how the regulators are doing in the last 6 to 12 months. It is moving forward. It's not moving backwards. My just from the innovator perspective, which I'm sitting in my position, I definitely have the personal hope regulators can spend more time and efforts and resources to look at this quickly developing new trend.
Yeah, no, absolutely. I agree with you. I think regulators have a tough job, and but at the same time, sort of when a technology like blockchain on which tokenization is built, and the applications in terms of the number of wider macro risks around settlements, around accessibility that it can solve, quite many times get overshadowed um, by some of the risks of such open systems. And for example, the whole money laundering, AML, KYC pieces, in many ways overstated. We've seen, the banking world has had much larger issues, in terms of money laundering, for example. However, regulators have to tread that cautious line, and we really hope that 2025 is going to be see a sea change in terms of how regulators see tokenization and blockchain and crypto, and especially DeFi rails.
Yeah. Exactly. But in our conversations, probably through you did the same thing. When we talk to regulators, first of all, they become more and more open-minded, right? And they are also
Mm,
very, very smart people. They understand the technology um, better and better. One of the view we are holding and widely accepted by the regulators are those technologies are not built to avoid kind of controls.
mm,
They can be also a very powerful tool, efficient tool for the regulators to perform their job, right? One, o- one of the key features is the records on blockchain are largely immutable.
yeah.
You cannot erase if you do
Mm,
something, anything, right? So this is
yeah.
it's good for the regulator perspective. You have this kind of data complete, accurate, and real time. That's sort of the dream status from regulators' perspective. They
Absolutely.
even
Yeah.
don't ask you to provide the data; they can just get it. Then
Exactly.
point to some suspicious activities and follow that.
Mm,
But having said
yeah.
that, of course, there are some features or some corners have not be well covered, not be
Mm,
comfortably covered from regulator perspective. That's why
yeah.
they are also very legitimate for them to ask a question: How can I deal with it?
Yeah. No, then let's segue from this interesting piece to your background. So how does a career banker like you end up on the other side of the table with crypto and blockchain?
First of all, I think I'm still on the same side of the table, a good side of the table. Um, yes, I was a banker in my career in the last 20 plus years. But one of the thing is 25 years ago, I was the e-commerce head with my employer. At the time, I will work with Citibank.
Mm-hmm.
So I'm pretty Web 2 OG. Uh,
Okay.
25 years ago, what I did is now we call the fintech. Before that, called the internet banking. Before
Mm-hmm.
internet banking, we call the online payment. So
Online
internet
payment. Yeah.
banking, all those things started with payment.
Yeah.
Started with payment. I was the e-commerce head at that time in my 20s. So I
Mm.
was the project leader and also the product manager and also the builder for the online payment, the first version of online payments in
Mm-hmm.
the whole industry for certain currencies, right? When I built this online payment thing,
Mm.
frankly speaking, I don't understand, I don't foresee the whole
Mm.
so-called internet banking and fintech will reach to current stage.
Mm-hmm.
A lot of similarities. People are very confident about internet will be in 10 years, but
Mm.
people will have a very, very different view in terms of what the internet will be in 10 months. And also people complained the internet was slow, was
Mm.
expensive, was not stable. And the regulator have the same thing because before we have the online payment, how do we make a payment? We need to fill out
Mm-hmm.
a form and sign on it, and then build the whole security controls over that to verify the signature is authentic.
Mm.
Then move to the online saying people don't need to sign on a physical paper, just type in some so-called password on
Mm-hmm.
chain. Then for everybody is a challenge. Regulator for the users, they ask the question, how come I don't put in a stamp or sign something, the money will go out. But now it's look like it's a no-brainer, right? Everybody accept how to make a payment. Um, on mobile phone, on internet. Nobody, very, very few people go to the uh, physical shop, branch of a financial institution to make an payment. So imagine that is that gave me the not only the impression I was the builder at that time to
Mm-hmm.
the now we call the Web 2. At that time we think maybe the ultimate internet, right? Then coming to the Web 3 is
Yeah.
blockchain based. Looks to me is a huge opportunity because the Web 2 we can transfer information but not values.
Mm.
In a Web 3 based on the fintech, the blockchain and some other techno algorithm, blah, blah, we can transfer values with trust
Yeah.
across the border because border is no longer a border, just wallet to wallet. So
Mm.
as I would say, that will be the impact on the financial industry is much, much even bigger
There you go.
than the internet
Mm.
25, 30 years ago. That's the key driver personally for me, say, make me very, very excited even after like more than 20 years on the financial industry.
Yes.
So I would say maybe something even more exciting to do. So I made my choice.
All right. And when was this, Henry? When did you start thinking about DGFT, or what was the initial thought, and how did you arrive at where you are today?
I started this initiative about 4 years ago.
Mm-hmm.
That was a key point. That was in late 2020 because 2020 there is a DeFi summer
Mm.
because everybody start to talk about blockchain, also keep an eye on it, try to understand it. Then coming to this DeFi thing come out, so-called DeFi, decentralized thing come out. Decentralized actually means multi-centralized, multi-centered,
Mm-hmm.
just not only one central right point. Then can be the point-to-point settlement, peer-to-peer settlement.
Mm.
Now you don't need, um, as a marketplace, you no need to own the assets. You just
Yeah.
facilitate from one wallet to another wallet directly. That would say something. This is something very novel.
Mm.
That's a something novel, not just gradual innovation. That's novel innovation. I would say that would the point make me to very very serious thinking. Can we do something build on that?
Mm-hmm.
That's the timing thing. Yeah, that's why
Okay.
on the very beginning, say we build this DGFT is a
Mm.
marketplace, but want to build it as an on-chain marketplace.
So are you in some way saying when liquidity pools came about in DeFi, that was your moment of recognizing that this is going to have a tremendous impact across all financial markets?
Yes, I would say the liquidity, the impact on liquidity, even so far, the kind of the benefits can probably only be realized in a small portion, but the outlook is so clear. And also some other features like the people can have the more ownership of the assets directly. Uh, then they can use those assets on multiple use cases. Just even buying T-bills, you buying it only satisfies step one is asset allocation, just
Hmm.
like a make a deposit. Now with this kind of token, you can use this deposit token, treasury token for other multiple purposes, which cannot be easily addressed in the current technical framework. So the ownership, the liquidity features, uh, now you multiple cases, somebody called the composability, right?
Mm.
Composability or interoperability, which is multiple chain or multiple use cases. Sounds academic dry, but that's the real use cases.
Yeah,
This is
absolutely.
put together and interrelated to each other. Now, wow, there will be a new future world. Probably today we only just imagine, but we didn't realize and didn't enjoy the benefits yet.
So in the sort of 4-year journey from 2020 to now with DGFT where you are, what was one Absolutely awesome moment that you always cherish.
There will be couple things.
Mm.
One is first we can build this up, apply this content technologies and into a solution. Number two, I would say, since we think it is a mainstream finance, it will become mainstream finance. We want to be accepted by the regulators.
Hmm.
And I talk to regulators all over the world and see how can so-called a different concept, decentralized on-chain way to do a marketplace. We just do not own assets. Do you accept? So I would say we first get a very, very positive response from the Monetary Authority of Singapore. That's why we're the first one get the sandbox because no regulation governing that, but sandbox perfectly fit in. Then we graduate from the sandbox, get a license. That's a huge moment. If I mention another moment is happened just a couple months back, actually 2 months back. You probably noticed is one of the key asset provider, which is UBS Asset Management. They
Hmm.
issued their money market fund in the token way, offer to the public on the public chain. They use DigiFT as an approved distributor to distribute this money market fund, UBS money market fund. We call it UMINT, UMINT. That was
Hmm.
why I say another very important moment. It is institutional adoption.
All right.
It's a one big step
Fantastic.
into. Yeah.
All right. So on Alpha and Hash, one of the things that I've realized, being a second time founder and now building Aarna protocol, that we get so absorbed in so many aspects of building a company, and that we forget to celebrate several of these awesome achievements or moments in that whole building up phase. So I said every time I'm going to talk to somebody, a founder, a leader on Alpha or Nash, we're going to celebrate one of those moments. So I've got I've got my whiskey, and what have you got, Henry, to celebrate these awesome moments in your build up of the
Yeah.
GFT?
Since you mentioned the celebration, also bring the whiskey. That's the good thing for to celebrate.
Cheers to that and to a great new year 2025.
Yeah, thank you very much, and let's look forward to a better 2025.
Absolutely. Cheers.
Cheers.
What's the whiskey you're having?
It's a gift from our partner. It's a Taiwan whiskey.
All right. Okay. All right. Awesome. So I have to try. I've had the Japanese ones, of course. I haven't had a Taiwanese whiskey. Come to think of it, so that's certainly on my cards now. All
I will
right.
invite you to try something together.
Look forward to that. Look forward to that. All right. So Henry, what's you mentioned about one recent such milestone that was about tokenizing Ubase's money market fund on DGFT and using DGFT's sort of platform for distribution.
Yeah.
What have been some of the key learnings, and has that product in its tokenized form found product market fit? Is it for retail users, or is it for institutional users? What's the adoption? What's happening there? Just to get a let's use that example to get an understanding of how tokenization can play a very important role in sort of really getting TradFi assets on chain and out there.
Yeah. Indeed, I think it's a very major step, one of the key things in the industry uh,
Hmm.
kind of development history. About 6 months ago, BlackRock, a key asset manager to bring their money market fund on chain called Buido. And now
Yeah.
we see another major one, UBS asset management to also bring the similar asset class. but just another key person getting into the industry to
Mm-hmm.
distribute. So um, it's a key step in terms of institutional adoption. Because of this kind of branded asset providers bring the assets on chain,
Mm-hmm.
then YS is a big push because the market got more attention, obviously, and push a lot of people, or encourage a lot of people to think why the same asset class in offer in a different way.
Mm-hmm.
Because one thing tokenization cannot change or does not change is tokenization does not change the risk return profile of the assets. That's not the tokenization can contribute. But
Mm-hmm.
moving the things in the token, what it can change is three you mentioned like liquidity, transparency, ownership, composability, interoperability. Then the people will start to think, are much more encouraged to think is how to build the like a composability liquidity.
Mm-hmm.
In the merely like 2 months since the launch, the inquiries, the market interest, I would say has been significantly changed in a good way.
Okay.
People start to listen to it. And then in the just merely 2 months, people start to think about how to build on the tokens, the
Mm.
so-called money market fund token. Money market fund is a very basic raw material in the financial industry. So build the use case, that's something happening almost every day.
Okay. And let's dive into this deeper. So, the money market fund is now tokenized, and every time a user, how does user acquire them? They connect their sort of MetaMask wallets, and then or whichever DeFi wallets, and they're able to deploy stables against that, or how do they acquire if I want to get a UMINT token?
Yeah. Money market fund is part of the liquid fund, right? So liquid assets. Their feature is very stable, liquid with certain yield. Then moving the token, they're still very stable, liquid, and with certain yield. Then what's the use case of this kind of liquid fund? Usually there were three. Number one, asset allocation. Just allocate to certain assets to this asset
Yeah.
class. Number two, as a treasury management. Between your account receivable and account payment, you have a 3 days, 30 days. You want to deploy into some stable assets to earn some yield. Usually you don't deploy to some volatile assets. Number
When you're
three,
talking about treasury, sorry, when you're talking about treasury, you're talking about now crypto projects, DAO treasuries and stuff like that, who can now access TradFi assets through this. Is that what you're talking about?
this is a one big use cases because
Okay.
there are many more and more stablecoin projects, isn't it?
Mm. Yeah.
Uh, they are basically proxy of US dollar, but what's
Mm.
underlying? It is in the dollar in the it's a dollar assets. Need to be very stable and better to have some yield and with huge liquidity. So treasuries, money market fund are
Right.
the very typical deploy assets, so-called treasury allocation.
Okay.
Uh,
Okay.
but for the
Third
just
point.
kind
Mm.
of things, they are difficult to get access to it. So if the assets in a token way, it's
Yeah.
a huge, it's a very easy decision to deploy into these kind of assets.
Hmm.
Yeah,
Okay. So the third point, when I kind of interrupted you,
as collateral.
collateral. Okay. So, and as collateral now, and actually that leads to my, as you were talking about it, I was thinking about it. In DeFi, and when you take composability, you've now got a tokenized form of a money market fund, and a user has deployed their let's say a part of their treasury into this. Now they've got the tokenized form of this UMINT token. What How do you see this panning out in the future? Will there be other protocols which can create more interesting structures on these tokens? How will composability play a role? Is this all completely freely transferable? And I think that would be the stage when really DeFi composability and the sort of innovation of structured products are built on RWA tokens, and that kind of really opens up a whole new market.
Yeah, there are, you ask the question actually with actually rich information, right? Um, just pick some to answer the question.
Hmm.
Use cases, for example, like as collateral in the DeFi world. What are the collaterals? They're basically either BTC or stables, right? Stable coins. But both are not perfect actually. Stable BTC not stable. Stable coins has no yield. Then the kind of money market fund treasuries stable, liquid with yield, but they are not in the token way. So if
Hmm.
once they become in a token way, if be adopted by in the DeFi world,
Hmm.
actually better. How much money we're talking about? Just say like in the DeFi world, the collateral at least has a 10. My information probably not too complete, but it's not too far away from the truth. At least a 10 billion collaterals are in the stables. In the
Hmm.
way of stables, basically stable coins in the smart contract, locked in the smart contract. If we replaced by this kind of 4.5% return uh, T-bills or money market funds, will generate additional 450 million revenues. So that's
Right.
the money leave on the table.
Right.
Uh,
Well, of course. I mean, in the current markets, I mean, there's a movement towards yield-bearing stable coins, and for example, we saw the Athena launch, but even the granddaddies of stable coins, USDC, USDT yields currently are quite high, and there is a movement to that. But clearly, once you have stable instruments like money market, in a tokenized form, and be used as collateral, it can open up multiple applications, and it's difficult to also foresee all of that from where we probably stand right now, but that's exactly the future. One such one and as this sort of unveils, I mean, one of the things that I realized, for example, when we launched our alpha 802, which is the crypto world's first AI quant tokenized structured product, is around, even when in our case all the underlying assets are utility tokens. There's no RWAs or anything in the underlying assets of this structured product. But once you have this tokenized form of it, and find the ecosystem of oracles for establishing a pricing for that, for these tokenized structured products on dexes or other platforms, becomes a challenging one. Of course, the way our product is structured, it's all kind of built up from the underlying prices of the underlying assets. But when you take RWA assets and the lack of and a completely established Oracle framework for pricing, how do you deal with that?
mm. uh, First of all, I would say three. Your product is very, very exciting and interesting. That's why we talked about it, right? You're using
Yes.
your AI way to better improve efficiency and the return for your portfolio. That's very, very innovative in the market. Uh, you mentioned that your underlying could be cryptos, etc. But looks to me is you are also RWA. It's if the assets really meaningful, right? Generated the true returns. It is a real world. It is a real
Yeah.
world, and you package it in as a maybe in the form or as a fund or whatever forms, and it's already in the token, and we offer in the token. Hopefully, we can work together in this new year to offer. I do see the room to have a product market fit. You see, the benefits if your underlying are very liquid assets, and you
Hmm.
definitely organize your portfolio or your structure, your notes, whatever, very very liquid, right? Could be as liquid as like real time. Then this kind of thing in the token way we offer to the investor, no matter they invest in fiat currency or invest in stables, they will automatically enjoy this kind of unprecedented liquidity of the investments from the T plus days or T plus maybe even months to T plus seconds.
Mm.
This is a liquidity. That's
Yes.
liquidity. If you can deploy the assets in the way of seconds,
Mm.
you need to imagine the
Yeah.
use case built on that. So that's why I will address that one to that. Then the price oracle, how do you uh, just like a price it, right? How
Yeah.
frequent it change? Then the DeFi have give a very good leading examples. They do change the price very, very frequent. They also
Mm.
can be pay you in the interest like in couple minutes, right? Every couple minutes can pay you
Yeah.
interest. Isn't that great? You know, then in the traditional current world, when the people earn the interest, you have to put the money over the night somewhere. Then 12 a.m., then people calculate the interest. Intraday, definitely no return.
Mm.
Now, if the instruments coming to pay you interest in every 12 minutes, then you have an intraday, 1 hour, you have a 4 times of investments
Mm.
accumulated. That would be very, very different and in a good way, upgrade from the current efficiency. Then
Mm-hmm.
in turn, well, to push those so-called non-native crypto assets, we call the RWAs or
Mm-hmm.
traditional assets, how can they improve the kind of efficiency, right? Or the liquidity, the
Mm.
asset itself, or through some liquidity pool. Through some liquidity pool. So you invest some underlying assets, could be like a 5 years, 10 years, 30 years underlying assets, but the liquidity can be in 3 seconds
Mm-hmm.
as long as you have a price oracle. And this price
Yes.
oracle for a certain product, they don't need to change every 3 seconds.
Mm.
It can be constant for a day, which is applied to many assets. They are very stable. They're very stable. So they just feed the price, but the settlement can be in seconds.
Mm-hmm.
Called the real time, right? Now the real time means seconds. In the future, the real time could be maybe milliseconds. Just like internet was slow before, now internet become very fast.
Mm-hmm.
That's the future I foresee definitely will happen. Just like Netflix was not the application back to 2000
Mm.
because of the technical constraint or bandwidth constraint. Now Netflix, you ask 10 people how do they listen to music, how do they watch the movies. I would say the majority go to streaming. That was
Yes.
not the internet of day one, but it's an
Mm.
internet mainstream now.
Yeah. So we're envisioning a world where tokenization of every financial asset class, or not just standard assets but way beyond that, and a very efficient price oracle system also existing, which kind of completely reflects on-chain pricing backed by the underlying RW assets. So I mean, that is obviously bound to happen, and you give a very apt example of how, for example, streaming's taken over, but nobody could envision that at that point in time when because there was a completely unrelated issue around bandwidth, which was impacting that. What makes you really excited, Henry, about tokenization, AI, asset management? Okay, when you look at all of these aspects, do you think especially now, do you see a role in the tokenization of securities, and how AI could play a role in that, at DGFT?
That's a very good question. I don't think I am confident to tell you the perfect answer for that. But now but this is a very, very kind of visionary, forward-looking question because tokenization is something using technology to improve the efficiency. right? Trust, transparency, settlement, blah blah. AI is another big step, technology breakthrough to improve efficiency. And so they are moving in the same direction. So how to combine these two together? Because tokenization, especially when we see the financial industry, tokenization is one of the segment, but the size is very big, right? We talk about hundreds, trillions. So once you have reached a certain point, have so many suppliers in the market, then that's maybe something too rich for the human being to digest.
Mm.
Then you need to rely on the tools. So I
Yes.
think one of the most powerful tool recently is so-called AI, general called AI, but basically some another new way to digest the so-called vast quantity of the information, right? That's my current understanding of it. So you're already applying it to select the assets and how to move, you to select the assets and to optimize the assets. Then you rely on the tokenization, which is token, to realize your redeployment
Yeah.
and the reallocation. So that's already a good example or combine these two things or apply one thing to another.
Mm.
And then their efficiency can be compatible, right? Not one behind another one. So you think too fast on one thing, you have to be slow on the another leg. So that's some of my shallow and humble understanding, but something I would say would be even beyond my current imagination, not only thinking.
Hmm. And what's your vision for DGFT? In as we started out the talking today, you spoke about the third generation of an open system. Now, what's your vision of DGFT? Where do you see DGFT and the overall ecosystem of tokenized asset class evolving over the next 3 to 5 years?
Mhm. I view DGFT is an exchange marketplace and beyond an exchange. Basically, it is more like an infrastructure because we mentioned open. Open means you don't have an versus less open, right? Or close. Close, you have a very clear boundary. Open, the boundary is not that clear, not that important, but the compatibility is more important. So our envision DGFT is still in a marketplace. We focus on as a marketplace, but it's like an open marketplace, then become more like an infrastructure. This infrastructure has a couple key components, right? Key functions. And when the partners come in, it is more like a plug and play. So like the assets come in, no matter it's a naked assets or you already make the assets in a token. So you can just plug and play, can issue your assets to reach to your audience, which are investors. And from the investors' perspective, we don't restrict you must use this wallet or you must be on one specific chain. You can on the chain you want. You can choose the wallet you prefer, and even using the stable coin you prefer. But you still can buy, for example, your structured notes, right? Your kind of AI driven kind of portfolio they can buy. So it's a plug and play. And the DGFT sitting here, we can do
Hmm.
it legitimately and we are licensed, right? Means
Yeah.
we fulfill certain obligations and we are then allowed to match. Then it's more like a plug and play. Everybody hopefully feel convenient and transparent and safely plug and play together. So, but on the other side, we do not own your assets. You don't need to give me assets. You just
Hmm.
own, and every second you own your assets in certain form.
Yes.
So that's
Yeah.
why we say DGFT will be a plug and play infrastructure for the future capital markets.
Hmm. And where do you think, to sort of close out this conversation, the adoption of this this future capital market will be faster? Do you see it sort of moving faster in certain regions of the globe, or what's how do you see things panning out?
In this regard, I'm pretty optimistic because this kind of innovations, uh, first of all, the whole world is talking about it. Um, then secondary is looks to me is no major market turn back to it. No matter we're sitting in Asia for the moment, right? At the Asia, the global markets like Singapore, Hong Kong, Japan, all talk about it, or even
Yeah.
have a very some regulations already there, and licenses be given. Europe also very active, and Middle East is also very active,
Yeah.
and America, United States also talked very, very actively about the no matter legislation, licensing, or kind of a projects. So look at the whole world. Actually, nobody is missing to the party.
Mm-hmm.
Nobody is
Mm-hmm.
missing to the party.
It's the
But of
party.
course, a relatively early stage. But everybody is
Mm.
moving that. So does AI. Though in this regard, I'm optimistic in
Okay.
terms of what things will happen in the not long future.
All right. Absolutely, a fantastic conversation, Henry, delving deep into tokenization, the real convergence of how financial assets and blockchain technology and crypto will pan out in our world of decentralized finance. Thanks for being on Alpha Unhashed. Enjoyed our conversation.
Thank you very much. Thank you again for inviting me, and looking forward to do something together.
Absolutely looking forward to that. Thank you.
Thank you.
Bye.